During this time last year, cryptocurrencies were hands down the best performing thing in most people's portfolios. Everyone knows what happened after that. Crypto investors were in for a rude awakening. After a meteoric rise in 2021, crypto markets tanked big. As the saying goes, once bitten, twice shy. Most people were destroyed by the crash, and others were hurt quite badly. Cryptos isn't the first speculative bubble, and it won't be the last. Here are some lessons people must learn as investors from these crashes, especially those who want to speculate. Lesson number 1: Learn the signs of a speculative bubble. Last year, it seemed like everyone, almost every Tom, Dick, and Harry, was talking about crypto. Lifestyle influencers, celebrities, and YouTubers alike. Even those who previously did not even know or care anything about finance or investing, they too were talking about cryptos. People had a YOLO mindset, taking on huge risk for a chance of getting huge gains. In fact, if you did not invest in crypto like I didn't, most would call you stupid or chicken little. If you showed skepticism, you were mocked and suggested that you know very little. Looking back, I just want to say that you will be called chicken little till the point sky comes crashing down. The second point that I want to talk about is do your own research is not a tagline for jokes and memes. During my broad research into decentralized finance space, I learned a few things. First, cryptocurrencies do not equal to blockchain. They are just one way of using blockchain technology, and there is numerous applications of blockchain technology along with cryptocurrencies. Point number 2 is that there are thousands of cryptocurrencies and decentralized finance projects. Many of them do not even try to have a real world utility. The third point that I want to present to you is that being decentralized means that they are not regulated. That means that they are not governed by any central authority. Based on these facts, I decided not to put my money in as I did not understand these investments clearly and how they derived their value. But as I spoke to many people, I slowly realized that this was not the case with vast majority. Decentralized means no central authority. It means you can't hold an entity responsible if something goes wrong. Like there is SEBI that is responsible if something goes wrong in stock markets. If people had indeed done their research, they would have known this. The third point that I want to talk about is sticking to your guns is difficult. As someone who likes to talk and write about finance a lot, there's always a pressure to discuss cryptos, and it was very high on me too. On numerous occasions, people have criticized me for being overly conservative and old fashioned when it comes to cryptos. There were many times I questioned myself if I were truly a finance person if I did not talk about cryptos. I was stubbornly ignoring an opportunity of lifetime. Looking back, I am really very happy that I did not take an opportunity of lifetime and ignored cryptos. I think this is one of the most important lessons that a lot of investors need to learn is that they should stick to their guns. Lesson number 4 is study the facts before investing. I had some reasons for staying out of investing in cryptos, and they were as follows. Reason number 1 is blockchain technology and application of smart contracts is still emerging. Reason number 2 is most of the activities in the crypto world is still speculative and I couldn't understand how it derived value. So I stayed out of it. Reason number 3 is cryptos is an untested and highly volatile asset class which would have disrupted my existing portfolio and it would have added a lot of risk to my current portfolio. Reason number 4 is that crypto mining is extremely energy sensitive and it faces risk if there's an disruption of energy supply or a shortage of silicon chips that the world was facing at that time. The next lesson investors must take away is that new technology always has its risk. I will be the first to admit that new things are shiny and exciting, and it may be worthwhile to invest in them. By taking a leap of faith and becoming early adapters of this technology, as some of them can be life changing. That said, we must take into account that adoption of new technology doesn't happen overnight. Some technologies don't even become mainstream. It involves creative destruction. Some people, some companies, some projects, and some investors win, and others lose and lose big. To give you an example, we can look at Google and Amazon today, but what we forget is along the way, many companies met their early demise as people figured out how to use internet. Similarly, there are many cryptos today, and it is hard to say who will be the winner in the future. The last lesson that I want you to take away from this video is live to invest another day. Look, as far as I know, blockchains and cryptos may become the best performing asset class of all time, maybe 30 years or 20 years from now, or they can go completely garbage and become completely worthless. No one, especially not the finance influencers, can know anything about what the future holds. This technology is still in its nascent stage. But I do know one thing: it's often better to limit how much you lose when you are speculating on such new technologies so you can live to invest another day. Because part of investing for the long term is also learning to survive the short term. So, next time you want to speculate, do your research, limit your losses, and then take on risks. I hope this video helps you in your investing journey and helps you invest wisely. If this video was helpful for you, don't forget to hit the like button and subscribe to my channel for more such awesome videos. I'll see you in the next one.